Poly market shows that markets only assign a 10% probability that the shutdown ends next week. And if the most probable is 52% chance that happens after November 16th. So that's still another 3 weeks out.
Tom Lee starts by addressing the macro backdrop, and his message is clear: inflation is falling like a rock. The September CPI report confirmed this trend. For the past 12 months, economists expected core inflation to rise around 0.3% month after month. And indeed, the latest report came in right at 0.3%, exactly in line with expectations. But the details beneath the surface tell a much more optimistic story. The key component driving this decline is shelter inflation, which had been one of the biggest and most stubborn contributors to CPI. For much of the year, shelter costs were increasing at roughly 0.3 to 0.4% per month. But in the latest data, that number dropped sharply to just 0.16%.
Please take a little time to like this video, subscribe to the channel, and turn on post notifications for more videos like this. You can also check out our other videos on cryptocurrencies and the overall digital asset space and drop your comments and observations in the comments section below. Everything you do helps with the YouTube algorithm and immensely contributes to the channel's growth. Thanks and enjoy the video.
In terms of macro, I thought I would just comment on one, that inflation's falling, and we could see that with the September CPI report, and that the Fed is set to cut this week. Just to level set, over the last 12 months, economists have been expecting inflation to come in at 0.3%. This is core for each of the last 12 months. And in the most recent inflation report, that number came in at 0.3, which is much better than expected. The highlight of that report, in my opinion, is that shelter CPI has gone from being roughly 0.3 to 0.4 every month to 0.16. That's pretty much normalizing. I mean, if you annualize that number, it's coming in at roughly just under 2%. And that means inflation's falling like a rock, because that's the largest contributor to inflation. And in terms of this percentage of CPI components that are deflating from their peak, it's actually now at 51%, which is a very high number and well above the 32% long-term average. So inflation is falling like a rock, and that's while we're still in the midst of the tariff-related inflation pass-throughs. On the week ahead, there's a lot of economic data that's not going to be reported because of the government shutdown: durable goods, GDP, PCE, and the employment cost index. But we do get two key macro points this week: the FOMC rate decision on Wednesday at 2 p.m. Eastern Time. And then on Thursdays, the actual summit between President Trump and Xi Jinping of China. And that's going to take place in South Korea. Speaking of the shutdown, Poly market shows that markets only assign a 10% probability that the shutdown ends next week. And if the most probable is 52% chance that happens after November 16th. So that's still another 3 weeks out. There are a lot of granny shots reporting earnings this week. In fact, 13 of the 39 granny shots, or roughly a third, are reporting results this week. And they're highlighted here. You can see it's really heavily weighted for Wednesday and Thursday of this week. But it's been a good earnings season so far. 87% of companies are beating results by a total of 8%, almost 8%. That's big. 175 companies will report this coming week. And in terms of granny shot stock performance, the top 5 performers in the past week were Axon Enterprises, CrowdStrike, AMD, Robinhood Markets, and Arista Networks. A lot of this is AI related. The bottom 5 performers this week were Tesla, Live Nation, GE Vernova, Oracle, and Netflix. And some of these are on earnings. As far as themes go, Style Tilt was the best performing, followed by energy and cybersecurity, and finally AI/global labor suppliers.
We had a pretty good week. We saw Bitcoin close back above the bull market support band, which, remember, this late in the cycle, we don't really have the luxury of spending a lot of time below it. If you subscribe to the idea of the 4-year cycle, that would mean that Bitcoin finds a top within the fourth quarter of this year, right? If you believe in the 4-year cycle. And so we don't really have the same luxury that we had in prior years where Bitcoin fell below the bull market support band, where it basically just spent 2 months down there. Because if that's what happens, then the cycle might just run out of time. And so essentially we've gotten right back above it only 1 week later. Now, this is something we've mentioned before as something to watch out for Bitcoin. Like sometimes it'll have these very quick fake outs where you just get like a single weekly close below the bull market support band and then it goes right back above it. The same thing is often seen in bear markets, but just in reverse. Like in bear markets, you'll sometimes see, you'll see Bitcoin stay below the bull market support band. And every once in a while, it might pop above it. But again, it usually is pretty quickly faded and you don't spend more than a week or two above it. And that's actually happened many times throughout history. In the 2019 sort of intermediate bear market, you can see we popped above it very briefly and then went right back below it. So it's a good thing that now Bitcoin is back above its bull market support band. Additionally, it also has been able to stay above its 50-week moving average, right? And remember, the 50-week moving average is important because it ultimately, at least historically, it really does define the integrity of the bull market. Whenever Bitcoin goes below the 50-week on 2 weekly closes, that's usually a good sign that the cycle is over, and that has not yet happened this cycle. We've had some close calls, but it hasn't really led to any actionable things to do because ultimately Bitcoin just gets right back above the 50-week moving average and it continues on. But you will notice in prior post-halving years or in the early part of the midterm year, once you start getting those weekly closes below that level, that's when the cycle's over, right? And so Bitcoin not only has been able to stay above its 50-week moving average, but now it's actually back above its 20-week moving average. So we have a little bit of wiggle room. The 50-week moving average now is approximately $103,000. And the 20-week SMA now is at around 114K. So we closed the week at 115.5K. I didn't actually see the weekly close. I was a little surprised it was that high. But 115.5K, whereas the 20-week SMA was at 113.4. So all in all, it's a pretty good weekly close back above the bull market support band. And I do know that Bitcoin dominance started dropping a little bit over the last few days. And my interpretation of this is likely due to the Fed meeting is going to be the nice narrative for people to talk about, because there's obviously some speculation that the Fed could end quantitative tightening as early as this week. We'll see what they do. Powell said they'll likely end it in the next few months, but then you have banks like JP Morgan and some other ones thinking they're going to end it in October. I think another bank like Goldman Sachs, they think it's not going to end until early 2026. So who really knows how it's going to play out, but that might be the best narrative to assign to why dominance is struggling to make this move. And really, if Bitcoin dominance could get above its own bull market support band, it would likely be a pretty good thing for Bitcoin, because then it means all that liquidity is just flowing back to the king. And usually what happens is when Bitcoin goes back up to new all-time highs, Bitcoin dominance then goes up as Bitcoin tries to go to those all-time highs.
Lee notes that Bitcoin dominance has dipped slightly in recent days, and he attributes that to speculation surrounding the Fed's upcoming decision. There's growing chatter that the Fed might even end quantitative tightening sooner than expected, perhaps as early as this week. While Jerome Powell hinted that QT might end in the next few months, big banks are split. JP Morgan expects an end by October. Goldman Sachs projects early 2026. This uncertainty is likely fueling short-term volatility in Bitcoin dominance, but Lee maintains that if dominance can break above its own bull market support band, it would mark a powerful shift, signaling that liquidity is flowing back into Bitcoin.
I also wanted to show you guys the overall structure of the market, and you can kind of see like where we are. the first highs that were put in back in 2023, you can see that when we took those highs out, they were not retested at all, right? Not at all. We didn't come close to retesting them in 2024. But the 2024 highs, we actually did come pretty close to testing. Technically speaking, we didn't completely get back to where those highs were, but we got pretty close. In the current drawdown that we just experienced, you can see that Bitcoin actually wicked below, right? You can see they wicked below. So in the first one, Bitcoin, it was earlier in the bull market, Bitcoin was very strong and it came nowhere close to testing these highs. The next time we got pretty close, right? We got pretty close, but not quite there. And then the third time we actually have wicked below it. So you can see that as the cycle goes on, Bitcoin is retesting some of those highs even more frequently. So that will likely ultimately be the sign later on, this year, maybe early next year, is once you lose the integrity of one of these support levels, that's kind of the sign that the market structure is changing. And so perhaps the next level to watch, if we are able to put in new all-time highs, is going to be, Bitcoin's ability, what does it do at around 125K? Like if Bitcoin is able to run back up and put in new all-time highs, then when it gets a correction, that's what you're going to want to look for. And when you get weekly closes below that and or the 50-week, it would likely be a sign the market's turning. But again, we're not there yet. So far, we're seeing what we want to see. Bitcoin's back above the 20-week SMA. I know Bitcoin dominance is down the last few days, but overall it has been trending higher, even though it doesn't feel like it, right? It really hasn't felt like it. But when you look at it, I mean, you can see that basically in early September, about a month and a half ago, Bitcoin dominance was at 57%, and now it's at 59%, right? So it's moving in the right direction. It's just a very, very slow progression, and you can see these weekly closes by dominance continue to slowly inch higher. You have 59.48, 59.57, 59.64. This is one of those things, and I've seen it before. Usually what happens is whenever we get past that major milestone, in this case 60%, the floodgates open and then dominance shoots up a ton. But it is a grueling process just to get to that point.
Finally, Lee discusses Bitcoin's structural behavior across cycles. In early 2023, when Bitcoin broke prior highs, it didn't retest them, a sign of strong momentum. But in 2024, it came much closer to retesting its previous highs, showing that as cycles mature, the market structure weakens slightly. Now, in this current stage, Bitcoin has even wicked below prior highs, suggesting growing fragility as the cycle extends. Lee emphasizes that once Bitcoin loses the integrity of these key support levels, particularly weekly closes below prior highs and the 50-week moving average, it's usually a sign the market structure is changing and the bull market could be nearing its end.